Good afternoon, everyone. This lecture is on control and specifically in SAP. We looked at financials in Oracle and now we're looking at control in SAP. Again, some of the things that we actually talked about in Oracle, you will see appearing here in control, but I found control in SAP to be more in detail, and that's why I'm covering these slides. Managerial control or managerial accounting is another branch of accounting where you are not actually posting or recording transactions, but you're using the data that you collected from the transaction in order to generate internal reports that will help you make decisions regarding how to manage the enterprise. So you're looking at the expenses and the expenses of every cost center, and also the revenue generated by every profit center, and looking at budgets and see how did we perform compared to the budget, the variance, and so on. Now, control, you have seen parts of control actually in Oracle Financial Accounting when we talked about distribution, allocation of costs to different cost centers, and so on. Today, I think these slides will make things very clear as how they are being implemented within an ERP system. But one important thing, remember, control is not about recording transactional data. Any record of transactional data, which means either inflow or outflow of money, is actually done in financials. Managerial accounting takes the information from financial and generate reports in order to look at the expenses for a particular cost center or throughout the enterprise, as well as revenue, and also to compare actuals, what you actually spent versus the budget that you prepared at the beginning of the year, and to look at the variance and determine what needs to be done in order to minimize that variance. Okay, I think, yeah. So when we talk about the organizational structure within SAP, as I told you at the beginning of the year, a client is like an environment or a system. So when we talked about TS 665, for example, we said 665 is the client number that identifies TSU. So every organization, every large organization will have a client. Underneath that client, you will have different company codes. So if we talk about 665 for TSU, we have, as we said, the client is 665, but I have more than, I think, 300 different company codes, GBI 001 up until GBI 300. So all of these are different companies. Each one of you is responsible for one company. And the same thing in the real world. An organization, a big organization, a multinational organization will have a client number. Underneath that client, you have multiple company codes. Each of the company codes represent a legal accounting unit, which means that unit is capable, has its own books. They can generate their own balance sheet, their income statement, and so on. So it's very important that you realize that the client may have multiple company codes associated with it. And they, as you can see on the slides, you see if I'm a multinational organization, I will create a company code for United States, one for Germany, one for the United Kingdom, one for Australia, one for Japan, and so on. Each company has its own assets, its own liabilities, and owner's equity. Each company code, can generate its own income statement, balance sheet, and so on. And as you can see now, these company codes are in different countries. They also have different laws regulating their accounting and their transactions and so on. and reporting of financial statements. Also underneath a company code, we have what we call a control area. So every company code must belong to a control area. However, a control area can be responsible for more than one company code. So if we look back at the previous slide, we had United States, Germany, United Kingdom, Australia, Japan. We can have all of these countries reporting to the same control area. You don't have to create a control area for each one of them. So a control area is that area that manage the revenue and expenses. Every company code must be assigned a control area, but one control area can handle more than one company code. Why would you create a control area? Because you want to track your expenses and your revenues and want to do analysis on that. So that unit that's responsible for that is the control area. Control areas also belong to an operating concern. That's a bigger unit. So that organization is looking at the operating profit. The operating profit is equal to your revenue minus your operating expense only. So that's, as we said, like a bigger unit. Multiple control areas can report to the operating concern. Remember, operating concern is concerned about your operating profit. By definition, operating profit is equal to your gross revenue minus just your operating expenses. So that operating concern is looking as how well I'm doing in a specific accounting area, the accounting calendar. So here is a representation of an organizational structure. You have the Global Bike is a multinational organization. You can see there is global concern now is taking care of both the controlling area for North America and the controlling in Europe. You see that we have two company codes, Global Bike Inc. and Global Bike Company in Germany. Okay, now, as you all know, a profit center is responsible for generating revenue, and it also can be assigned certain costs. But if a particular unit within the organization is designated as a cost center, that means it's not capable of generating profit. In that case, something like the copy center, like a security department, like maintenance, is providing services and actually value-added activities to the whole organization, but they do not generate income by themselves. You can allocate their cost to other departments within the organization, and that's what we will actually see in the SAP exercise. Now, you report the activities of a profit center or a cost center either by region or by particular function or by the particular product that you are manufacturing. So there are so many different ways of dividing profit centers, and again these reports serve as tools for decision making for executives. Now, we saw when we did the financial accounting that we would have a transaction and it is reported with a number in the debit assigned to debit and another assigned to credit, and you use the general ledger accounts to debit or credit, for debit or credit. These accounts have a corresponding cost element in control. So we have expense accounts in general ledger and we have cost element in control. But there is a direct link between both. if you debit a particular expense account in financials, that will result automatically in a debit in a cost element, or a particular amount assigned to a cost center using a cost element. So when we talk about electricity, if we're paying electricity, for example, then we have an expense account called electricity, and once you debit, for example, the expense account and credit cash for paying out that electricity bill in cash, as a result of that transaction that happened in financials, you will have information transferred to control, and a particular cost center will be assigned that electricity cost. Now, there are no accounts, there is cost elements in control. So you have particular elements or particular expenses that you assign to control centers. Any transaction, remember, that occur in financials, you will have a corresponding posting in control. The posting in control is an assignment or an allocation of the cost to a particular cost center. So as the third bullet, sub-bullet under cost element says, for every expense account, you have a cost element. They're just called differently under the different modules. So financials may call it one thing and control may call it another. In financials, it is considered an expense account. In control, it is a cost element. Okay? Now, in control, we have two types of cost elements. Either a primary cost element or a secondary cost element. Now, the primary cost element has an exact corresponding expense account in financials. So every transaction that occurs in financial will be posted in control using a primary cost element and assigned to a certain control center. The secondary cost elements do not have a corresponding transaction in financials. What we are doing with the secondary cost element is taking a primary cost element and then allocating it to different cost centers. So the headquarters may pay for electricity. And as soon as we have electricity paid out to the electrical company, a corresponding transaction will appear, or a corresponding posting will appear in control for electricity assigned to the headquarters cost center. Well, electricity is paid for the whole organization. I need now to allocate the cost that was incurred by headquarters to different departments. And we use something called distribution. We allocate that cost and divide it among the different departments based on something called statistical key figures. It could be based on square footage. It could be based on number of people that are employed or working in a specific department. So the secondary cost element is something that only occurs within control. And they create the secondary cost element to enable the organization to allocate a cost or divide it among different departments that normally you would not get a bill, for example, from the electrical company just for room 307. You'll get a bill for the whole building, but that whole building has so many different units and they need to share the expense. So in order for us to be able to take a transaction from financials to the different cost centers, not just one, to allocate them and share them among the different cost centers, we need secondary cost element. So as you can see, this chart is just like trying to show you that under financials, we have the general ledger accounts. We have an income statement and a balance sheet. Now, remember that we said all of the accounts that are defined in the chart of accounts will appear in the general ledger. Some of these accounts belong to the income statement. Some belong to the balance sheet. If we're talking about transactions, posting any transaction, that will have to be assigned to an expense account. The revenue, of course, are allocated or assigned to revenue accounts. Every single expense that you post in financials will result in an equal post or a corresponding post in control. Now, we said that in control, we don't call them expense accounts. We call them cost elements. So as soon as something is posted in financials, it's automatically transferred to control through primary cost element. So why do I have that secondary cost element? Remember, if I want to allocate that primary cost element into different departments, I have to use secondary cost element. So the secondary cost element really do not retain the same identity as the primary cost element. In this example, is just trying to show you that if I have a copy center, we said the copy center is a cost center, does not generate any money. It is there to serve the different departments within the organization. So if I have executive offices, a maintenance department, and an IT department, and they all use the services of the copy center, and that copy center worked for 20 hours, I'm going to charge the cost of that 20 hours to these different cost centers. I will assign 6 hours to the executive office, 10 hours to maintenance, and 4 hours to the IT department. So the 6, the 10, the 4, these are called statistical key figures. Number of hours is assigned. But that's not the only way for you to assign cost among different cost centers. You can, as we said, use number of employees, or you can use square footage, or you can use like the time for computer usage, and so on. So the statistical key figures are a way for you to allocate cost to different cost centers. We can either have an allocation based on like statistical key figures like the hours that you see over here, or it can be based on some kind of a policy, so percentage. Instead of using a statistical key figure, we can use percentage. We can say 10% of the cost will be assigned to executive office, and then 40 for maintenance and 50 for IT, for example. So either you use statistical key figures, or you use percentages based on the executive policy or the company policy. Now the process of transferring from financials to control is very obvious over here. So if I pay for supplies expense of $1,500 in cash, in financials, I'm going to post that transaction as 1,500 debiting supplies expense, and crediting cash, because I've paid for that transaction in cash. Remember, cash is a current asset, and when you are decreasing the current assets, then you credit it. When we increase it, then that's when we debit it. So we bought supplies, and that's why we debit supplies and credit cash. Now, who bought these supplies? Who bought them, or who needed them, who is using them? We are going to assign that cost, the 1500, to a cost center A. There will be a cost element called supplies, for example. So supplies is now the cost of 1500 for supplies is assigned to cost center A. Why are we doing that? Because at the end of an accounting period or an accounting calendar, I want to look at all of the expenses that have been assigned to cost center A, and to be able to tell, are they running their processes effectively or not? So the cost element that it occurs in managerial accounting, and it is automatically updated as soon as you post the transaction in financials. That cost element is allocated to a cost center. Okay, the cost element is 2000657 that refers to supplies, and it's being allocated to cost center 19000122432, and that's the particular unit that is using these supplies or ordered these supplies. Now, managers at the end, as we said, of a period will look at these expenses and see if they are running their operation, that particular unit is running its operation effectively. They are able to look at a particular cost center or look at a whole company, like a whole company code. When we have now secondary cost elements, I'm using a particular cost that has been, a cost element that has been assigned to center A, cost center A, and allocating to cost center 1 and 2. So the 1500 supplies were not really used all by cost center A. Cost center 1 and cost center 2 are using the supplies. So the 1500 need, or have the cost center A maybe having subunits underneath it, and now need to allocate the 1500 to cost center 1 and cost center 2. It could be that it is just supplies, but you will see also that there is a possibility of combining several expenses together and naming them something different and assigning them to cost centers. An example of that is IT. IT support, you can combine several things: storage, security, web development, and web maintenance. All of these can be assigned to a particular cost center, but then it allocates it to the different units. So maybe the IT department will carry the initial cost of the software they buy, the hardware, the salaries, but then they later allocate that cost to the different departments that use their service. Now the cost is combined. So now we have IT cost, but really if we go and delve deeply, that will be broken down into hardware support, software, database, the network, security, websites, and so on. So if I have a rent expense, I can combine the rent expense and the supply expense and the labor expense into one pool and then reallocate it to different units. The different units will not know how much is for the rent, how much is for the supplies, and how much for the labor. And a good example would be maintaining or allocating the cost of a copy center. The copy center is occupying a certain space, and it requires certain supplies like toner, for example. And they have someone who operates there. So I have a labor expense. So 1,500 for the rent, 2,500 for the supplies, and 2,000 for the labor. I need now to allocate the total sum of copy center expense, which is a 6,000, and divide them among the different departments that use the services of the copy center. So I'm allocating 1,800 to the executive office, and then 3,000 to maintenance department, and 1,200 to information services. Now, how am I allocating these costs? I'm either allocating them based on percentages, or I'm allocating them based on what we call statistical figures. So it could be that I'm using number of employees as a way for me to allocate the cost, find out ratios and allocate the cost, or I have a certain policy that says the executive will pay 30%, and then maintenance will pay 50%, and information services will carry 20%. We have two ways of allocating cost, either through distribution or through assessment. Remember, these two types of allocation of cost happen in control. So in distribution, I I post a certain transaction in financials, and we said as soon as we post them in financials, then an automatic transfer is done in control. A particular primary cost element that is tied to the general ledger, to a general ledger expense account, will be impacted, and that primary cost element is allocated to a cost center. So I can now say that primary cost element divided among 3 different units, and these 3 different units each should get a specific allocation based on a statistical key figure. With assessment, we don't know the exact amount or the exact origin of the expense. So remember, when we combined rent, supplies, and I think something else I can't remember. Rent, supplies, and labor expense. We combine them all into a pool and reallocate them. In that case, that's assessment, because they do not retain, the cost allocated does not retain its original identity. I don't know, in that previous example, I don't know the 1,800 is exactly for what. Is it how much is for rent, how much is for supplies expense, how much is for labor? The way that it is allocated to the different cost centers is because of a statistical key figure, or because of a percentage, not the exact amount out of here. So I don't know exactly how much am I paying for rent, or how much am I paying for supplies, or how much I'm paying for labor. I know that's the total, and me as a control, a cost center, I'm not really concerned about that, because the original cost was incurred by copy center. Now I'm allocating the cost of the copy center to different cost centers. Each one don't know. They know that they're paying the 1,800 for using the services of the copy center, but they don't know the original identity of the cost. So in that case, we call that assessment. So when I have a rent expense and I decide to distribute it among different cost centers that I have on the pie chart, and each one is occupying a specific square footage, I'm going to use the square footage to generate ratios. And as a result of these ratios, I have now a particular dollar amount that is assigned to each cost center. That's called the distribution. Why? Because the particular expense retained its identity. Each one of these units know they are paying $275 for rent. Why? Because of the particular square footage that they are occupying. With assessment, it's different. I'm pooling together multiple expenses into one and then allocating it to different cost centers. Now, in this example, we're using percentages. The percentages are based on the company policy. So I think that, and as a result of these percentages, I have an allocation for a specific dollar amount to each of the cost centers. That's all for control. So just like to review what we have just said, control is concerned about using the financial accounting data in order to manage the enterprise, manage cost and manage revenue. It is not used for posting transactions.